Charles Neal, you're an economist and you've been a banker most of your life, and now the past year you're with a brokerage. How does that feel, making that transition?
Well, I came into the market at an interesting time when it was starting to correct, and so this year's been a very interesting one in terms of reorganizing a landmark in order to face the new challenges of the market.
What has that involved? I mean, what have you done?
Well, what happened in the sort of previous years, it was very much a seller's market, and people were climbing over themselves to do transactions.
The go-go years, yeah.
Yes, and just about anybody who could sell made money. The agents were just churning over deals and moving on to the next one and doing several in a day even. Now, what has changed is that this has now become an end user market.
A normal market.
Normal market. It's maturing, and so the mindset has had to change, and the company, we've organized ourselves really around our business functions to be more customer orientated and focusing really on customer service. So we've moved away from what I call the transaction-based deals to really working with our customers now and establishing long-term relationship with them, and hoping to keep our customers now over the years to come.
And who are those customers? How would you describe them?
Well, they all come in different shapes and sizes, of course, but you've got some very important individual customers, both in the UAE and outside, as overseas investors. A lot of the corporates, the developers, even the banks and insurance companies are our clients. They all have different property requirements. And also what's happened is, as the market's matured, that the need for property management has grown, and we established that division last year. And the focus very much now is on how you're going to protect your asset, how you're going to position your asset, how you're going to get the best out of it. So this has opened up a whole new line of business for us.
Your company is focused on Dubai and Abu Dhabi. Do those differ, those two cities which are 90 minutes away at best?
Yes, they are. They're different, but they also complement each other. Interestingly, we don't see them as competitors in the real estate space. But I think what is interesting for Dubai is that it, as a city, is still many years ahead of any other city in the region in terms of its infrastructure and its capacity. It's got surplus residential accommodation, surplus office space, surplus retail space. So Dubai is benefiting from the growth now that's taking place in nearby economies like Abu Dhabi, but also the growth in economies like Saudi, India, Qatar. So we're seeing prospects for recovery in Dubai will probably from 2011 on will be fairly quick.
So you're also part of the group of people who don't believe that next year we'll see a radical turnaround?
No, I don't think there'll be a radical turnaround next year because there's still a lot of supply coming on the market. The market is very fragmented, so it's difficult to generalize. You can't make generalizations. But what you can do is look at, say, three sectors. One is villas. There's fewer villas now coming onto the market in the future as a proportion of new build. And we've actually seen prices going up a bit for villas in the last quarter. The new report that we released just yesterday showed that villa prices probably gone up about 6 to 8%
in Dubai.
In Dubai,
Mm-hmm.
but apartment prices have probably came down 2 to 3% in the last quarter. And we see apartment prices still declining, but the big fall is behind us. That we're not going to see another big fall. The big area I think of concern is really in the commercial space, where commercial vacancy rates are expected to increase to 50% by the end of 2011.
Oversupply.
Because yes, the supply was expected to double from 2008 to 2011. So you're talking of an increase of 30 million square feet to 60 million square feet of office space. This is going to bring a lot of interesting opportunities, I think, for people to try and differentiate their properties and position them so they can get full occupancy in their buildings. And that's going to have quite an impact, obviously, on rents and the amenities they put in, the quality of the buildings, and so on. So you are seeing a big change in the market. But what is interesting, though, is because there's going to be a lot of space, commercial space, and rents in some areas will come down by as much as 50%, that it's going to make it cheaper for businesses to establish in Dubai, which is why we're optimistic that the turnaround in Dubai in 2011 will be quicker than anywhere else in the region.